The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 124. Get the Nasdaq up 40. S&Ps are up 10. Gold contract flat, $1,318. We get silver also flat, $16.35. Light sweet crude up 32 cents, $63.33. We're going to have oil today, right?
You got it.
Wednesday.
Half hour from right now.
Okay.
What, 23 minutes, yeah.
Notes and bonds. You get the 10-year note up 3 ticks, trading 120.15. 30-year bond up 17, 144.03. Now, this is going to be really deviant because, you know, yesterday, you had Powell talk. Market came down. Bottom line, my take is that, you know, we had already gone higher with volume, so this thing's going to get tested again.
Okay.
And the 10 and the 30 didn't break their lows. So bottom line is that those lows are in for right now. If we get some juice.
Quite a two-way market, right?
Yeah.
You
had, there's no doubt.
Day before, up
right.
what, like 400, down 300, you know, up 400, down 300 in the Dow, all over the place.
It's a real market.
Yeah.
King dollar. King dollar's up 270 ticks. Now, that's trade. This is getting interesting. Let's go take a look at King dollar, because King dollar is going into 40,000 contracts. You know, had a good day out here yesterday. Starts coming into the swing point. You know, you had yesterday 29,000 contracts. You had 14 today, so you get a good 24, 30. But look what you're going into. You're going into, well, I guess that's, I thought it was 40,000. Yeah, it is 40,000.
Yep.
40,000 contracts, 90.530.
January 12th.
Yeah. And, you know, that's where we broke lower. And that was a decisive break. You know, so this is going to be important to how it gets into there and can it hold 90.530.
Okay.
90.530 is the low of the breakdown from the 12th, which we went from 91 to 630 into that level.
We're pretty much right at that level, right?
Oh, we're there,
just
man.
above it, yeah.
We are there.
2 pennies above.
The euro's trading right now at the 122 to 1 US dollar. The yen is out here at 107. Let's go look at the yen because, you know, we did do the gold contract came down, no doubt. When
volatility everywhere, man.
Oh man!
Even this morning, we'll look at the chart. Yeah.
Okay, so the yen still can't hold it, which is great for gold. We go over to the gold contract. Gold right now, 13.18. That thing came down hard yesterday. That being said, though, it's still dramatically lower than what we were going into. You're going
Just explain the volume. Okay,
yeah, we were going into 432,000, and we did 335. Now, what gold has to do is get. Look, we're right at it. 13.19.10.
And that's the day it shot up, February 14th.
That's the day of strength.
Valentine's Day.
Yeah, Valentine's Day. So we'll see where that whole baby is going to shake out. Some of the higher volume stocks out here today. You got GE. Oh man, GE's toast, man. Let's look at GE again. This is like pretty wild with GE. Yeah, she's going south, man. Just nonstop. $13.55 was the low. Monday, high volume low. It's going to go after that baby.
Market's going to stay patient to make sure they know there's a turnaround there before they come in. Yeah.
You get Lowe's is getting hit. Now, this is going to be interesting. Lowe's is getting hit.
They had earnings.
Yep, because that can't keep up with Home Depot. Let's see what HD is doing. Yeah, that already came down like that, though. That's interesting.
No, I was looking at some of the numbers, and even, you know, just as I happen to have the article up right here, we'll pull it over real quick for the headline numbers, because it's interesting, the headline numbers. So you have earnings they miss on, 74 versus 87, but they beat on revenue versus expectation. 15.5 call it versus 15.3. Same stores, they beat by a full percentage, right? But here's kind of the interesting part down here. They came in at 4.1 versus the 3.1.
Yeah.
But Home Depot had an increase of 7.5.
Yeah.
So they were already starting with bad expectations.
Right.
And yeah, they beat it, but they beat it with much less earnings. You know, that's a pretty big miss on earnings when you're supposed to, you know, come in at 87. You missed by 13 pennies when you're supposed to only make 87. That's a 15% miss on your earnings.
And you know, so watch. This is what the difference is between these two stores, folks. Is that the Lowe's realistically has more, not high-end things, but more fashionable things.
Sure, and it's more retail, right?
It's more retail versus builders. Like we use both of them, but the reality is that more money does go into Home Depot than Lowe's.
And that's so, you know, I shop just for myself when I'm in the stores, really. You know, and Lowe's is a more enjoyable atmosphere for me because Home Depot is a warehouse. You know, and that's where so it lends itself to exactly what you're saying. I agree. Yeah. So interesting stuff though. They're getting smacked for sure, and it's still pretty remarkable. I mean, they're growing 4.1%. The market thought they were going to grow 3%. I mean, same store sales. It's the same store. It's amazing how same stores are always growing. You're only growing in the area you're in. You know, and you're growing 4% in the same exact store across the entire company.
Yeah.
And, you know, it'll be interesting to see what happened there, though, because that's a big miss, man. You know, that's a big miss in terms of, especially when you're beating on revenue. You're beating on expectations for same stores. Well, what happened here? You know, and like we said, you know, Home Depot coming in at 7.5 in the same period. That's a tough one.
No, there's no doubt, man. No doubt. A few of the other high volume ideas. Oh, Dick's Sporting Goods. Okay.
Yeah, DKS.
DKS. So Dick's is going to stop selling AR-15s.
Yeah, they're not going to sell.
That's a beautiful thing.
I agree. They're not going to sell assault rifles. They're not going to sell high-capacity magazines. And I believe they're also going to change some of the ages that they're selling as well.
Yeah, they're going to go to 21. Now, you want to hear something bizarre about Florida, folks? Okay, this story is crazy. So we have this big fair. Well, we have a lot of fairs, but you have the Strawberry Festival, which gets like 100,000 people.
Sure, it's huge.
Because they have big concerts and all that. Well, check this out. This is crazy. In the Strawberry Festival, you can't bring water in. Okay? But you can bring guns in.
Yeah.
And what happened, this is a quirk in the law, actually, okay? So what it is, because it's under the Agricultural Act in Florida. Right? These fairs are under the Agricultural Act, right? Like no one in Florida, you can't bring guns into a concert. Okay? But this is, you're talking about high-end concerts they have, right?
This might as well be the same thing, right?
But guess what? You can bring it in there. It's like, oh my God. I was reading this morning and it says, you got to be kidding me, man. And I mean, we happen to be here, so I know where these, you know, it's in a big, basically, you know, it's
field, right?
It's a big field, right?
Yeah, for sure.
But they got to get some of the stuff straightened out, man, because that's just about as bizarre as you can get.
I agree.
Because the fact is, folks, this is a family atmosphere. That's what, you know, you got to remember, it's an agricultural fair. It's the 4-H's that started with this whole deal.
And how does it make sense? You can't go to a Tampa Bay Lightning game, right?
No.
For the same reason, security.
Yeah,
you know,
exactly.
Yeah.
Bizarre.
So with, you know, Dick's, you know, they're up, and then, you know, the article is saying some of, you know, the gun manufacturers, of course, are down with that news that they're not going to be selling. Dick's is a giant, you know, and of course the thinking about maybe that begins to stretch across a variety of companies.
No doubt.
Yeah.
So
tell us about the Traders Expo.
Oh, it was busy. It was a good expo. You know, what was intriguing is that this is the busiest it was I saw in like 10 years.
Markets at highs, baby.
I know.
Well, we're almost there.
No, it was there. It was really different. I wasn't expecting it, you know, but it was there. Yeah. Stay right there, folks. Tommy and I are coming right back. We have the Dow right now up 123. Nasdaq up 40. S&P's up 10. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up $1.45. You get the Nasdaq up 45. S&Ps are up 12. Let's go over to the Nadex platform. We'll take a look at this oil market, see where we're at here.
So Wednesdays, 10:30 a.m. Eastern time, right? You got the EIA numbers coming out. Oil's had a little bit of volatility already this morning. Even just back up the chart a little bit. We had the API numbers last night around 4:30. I believe that's, yep, there's the bar. So trading a little bit lower, but higher we go. We're almost up at $64 as of yesterday. So we have about 11 minutes until those inventory numbers come out. We're trading at 63.11 currently. And to get in here, first spreads I
pretty good. There's a 63 there. Yeah.
That's, yeah. So first spreads I jumped to are the 11 a.m.s. Okay. Now I say 11 a.m.s. They go from 9 till 11. They expire at 11 a.m. The inventories come out at 10:30 a.m. So you're gonna have a half hour of trading after those numbers come out. They're each $1.50. So you have your 63 to 64.50 for your bullish trade, and you have your 63 down to 61.50 for your bearish trade. Now, if you're trying to trade volatility, you're buying both sides. The bullish trade is going to have your 8 pennies to the upside of intrinsic value,
right?
Plus your premium you're paying. So on the bullish one, that's going to cost us about $23 or 23 cents above the floor of that at 63. Bearish one's going to have no intrinsic value because you're kind of 8 or 9 pennies out of the money, and it's just going to have the premium. So it's going to be about 15. You're looking at $38.
Okay.
Call it, you know, with commissions, $40, which would be
4 pennies. Yep.
40 pennies, right?
Yep.
40 pennies,
40 pennies, yep.
away from the $63 that you would need. So that's why a little bit bullish, because you have a head start of 7 to 8 pennies on the bullish side. Now, before we dig into it too deep, let's just see where. Oh, you know what happened here too? I'm going to just jump back because I've had this up, and anytime you do, I had it up all morning,
yeah, right,
and so I just need to refresh and pull it up. And there we go. And that way, all I'm doing here is I'm making sure I load. You refresh, because I had it up since before 8 in the morning.
Right.
The noon ones open at 10, right? They set every time, so we're going back into commodity spreads. We're going back into crude oil, and there are our noons now. And so they're going to have a slightly different point. Now, what's interesting here is these start at 63.25.
Yeah.
So on this one, your bearish trade is going to have some intrinsic value.
This is really cool, actually, because, you know, if you're just going for volatility, well, that's one thing. But if you're going for volatility plus you have a little bias, you have both bullish or bearish.
You do. Now, these go till noon, so you got that extra hour as well. But let's say you were bearish, okay? The bearish trade this time is going to have your intrinsic value, because you have value from 63.25 down to 61.75.
Yeah.
You'd be selling this position. This one's going to be your expensive one, because this one you have 15 cents of intrinsic value, so you're paying $15 for that value that's already in there. And on the bullish side, that's the one that you're completely out of the money. Yeah. So it's a very similar $15, $16 because it's just premium. So this one's costing you $46. Last one was $38, right?
Yep.
And this one does have a little bit of a head start to the bearish side if you're going to make that trade. And with that right now, again, oil's trading about 63.12. And before we jump in, let's just see where the 230s line up. So the 230s have that same 63.
Yeah.
Now these are $3 spreads, though, right? Let's just close these, make it least confusing as possible. 63 to 66 on the bullish side. Again, the bullish one has the premium, the intrinsic value. You'd be buying that, so it'd be about $30 to the upside. Same price, 63 down to 60. You're selling that one. Now that's interesting. Only that, you know, that's going to be $49, right?
Yeah.
So, and that gets you not only the 11 a.m. was the 11 a.m.
Right.
This one gives you 3.5 extra hours.
Yeah, and more money.
But it also gives you $3 of potential movement as opposed to $1.50. And that's not out of the realm, especially not out of the realm with inventory coming at 10:30. Oil's been pretty volatile.
Yep.
And you have until 2:30. $49, so you would need, call it 50 cents a movement away from $63 to break even.
Right.
Yeah.
Let's bring that up.
Go for it.
What we got here. So... Now, this is a delayed quote. It was 63. Oh, it's right. It's pretty close to where it was,
And I just wanted to make sure that we were on the same. I believe we are. But, yes, it's the April contract. I just wanted to make sure as you jump into it. Go for it. Yep.
So, let's see what we got here. Yeah, so...
Where are we going?
Yeah, no, totally. It looks like we're going higher, man. Okay, let's take a look at this intraday. See if this, the spike is up there. Oh, this is interesting. So you had the spike down, but it didn't break the swing. Spike down yesterday.
Some big movement.
11:30 yesterday.
Yesterday.
Yeah.
Even if you back it up, was that during the 10 o'clock? When was that first movement? Yeah, 10:30.
Yeah.
I was doing the show with Basil yesterday, and I was just pointing out that as we were talking about it, it was quite an acceleration. Quite an acceleration that we were getting. Not really off news driven, but they were selling there for sure, and then it continued during the 11 o'clock hour as well.
I'm not going to do it, but I'd have a bullish bias right now.
Okay, so let's just jump back, though, with the bullish bias.
That number is what? That's 63.44, the high. Okay, that's still not enough movement, though, too, right?
63.44. Yeah, that would be pretty close. That's just over break even for the 11 a.m.s, right?
Yeah.
And it's actually under break even if you're trading the 230s.
Okay.
But that would be the trade that you'd most want to look at, because at least you have your intrinsic value that you start off with on the bullish side.
In this case, that's 19 cents, which is pretty cool.
13 cents, right? Excuse me, 11 cents. It's trading at 63.11. Is that what you said?
Yeah.
And
I see. Yes.
So it starts at 63.
No,
that's the 11. The bullish ones start at 63, and the bearish ones, their point was 63.25.
Right.
But give or take, that gives you a good feel for where the market sets up, the price. So again, you know, the 11 a.m.s were about $38. The 12 o'clocks were about 46, and then going back to the 230s, which are back to bullish, had about 48. So anywhere between 40 cents to 50 cents of movement in either direction, and you start to break even. And then, you know, you can always trade both sides of that as well. You get 50, 75% move in one direction. Maybe you close out that directional trade and look for the bounce in the other direction, especially maybe if you have the 12 or the 230, where there's enough time for that market to turn around before expiration.
I just want to see what these big oil and gas stocks are doing. Okay, so they can't handle price either. They've been, on a longer basis, these things want to go lower. So we'll see where this shakes out today. But that's quite a hit that they've taken.
So we'll jump back into it. News comes back at right at 10:30. We'll see where those trade.
Yeah. And if we go over to Bitcoin quickly, so you get Bitcoin out here. This baby traded up to 11,000 last night.
Yeah, pretty much right on the dot almost. Yeah.
You went into your downdraft. We're at 10,500. It'll be interesting to see 10,000. Well, it looks like it's already got below the highs of yesterday. Yeah, we'll see. It's going to try to get back in there, but we'll see how that shakes out. Because what you do have in the Nadex platform, folks, you get the weekly spreads inside that Bitcoin market.
Definitely. And let's just jump to them since we'll finish up. We got about 45 seconds till the break. There are weekly spreads. This week going from 47 to about 14.7.
Yeah.
So I believe the week opened at about 9,700 was the Monday morning open on that.
Yeah.
So we're nearing we're above the middle of the spread. And yeah, you can see that right now we're kind of splitting. Bitcoin trading 10,564 and the bid offer, give or take $20, $30 on each side.
Pretty tight.
Not bad.
You stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. We have the Dow Industrials up 137, Nasdaq's up 42, S&P's up 11. Come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got crude inventories rose 3 million barrels.
Yes, gas inventories rising about 2.48.
Big numbers, man.
Yeah, and I believe the expectation for the median analyst estimate was right at around 3 million barrels. Now, what's interesting here, scrolling down, this is the Bloomberg live feed. You had in here that the Bloomberg users were predicting a 400,000 barrel compared to, now maybe, I think that's, you know what, that's the API expectation. That's all that is. Bloomberg was looking for 400,000 versus the API came in at 933. But either way, so median estimate was 3 million barrels, comes in at 3.02, not bad. And let's just pull up. We're going to jump back in here. We're going to jump into our commodity spreads, crude oil. We'll jump into the 11 a.m.s first. And let's see where we're trading. No, we're getting some price action. There we go.
Oh, smoking.
Smoking. So now again, to remind what we're looking at.
Oh, it's just down 50 cents. Like a heartbeat.
For sure. So it was at 63.12.
Yeah.
Right before that, right?
Right.
Our bullish trades, we're starting with a floor at 63.
Right.
That was the 11 a.m.s or the 2:30s.
Yep.
The one bearish trade was going to be, now not one bearish trade. These are all getting into,
right.
The 12 o'clocks would have given you the option.
Biased to bearish.
Exactly.
Yeah.
The 12 o'clocks would have given you an option to have 63.25 being your yeah. So to pull up that, so here would be your bearish spread in that trade, right? 63.25, and this would be, you would be selling this. So right now, if you wanted to buy that back, you would be getting $60 back immediately.
Right.
And that was going to cost us about 46, I believe.
Right. Total
for the two contracts. Correct. Now, what's cool about that is that, you know, let's say you want to immediately, because we've seen it now, it doesn't look like it's going to stop just yet as that's accelerating, but you could close out that position. You take your, as it keeps rocking, you take your $65, right? You maybe profit $20, $15, $20, whatever it is. And then you still have exposure if in the next hour and a half that it trades above 63.25, that your bullish position is still open. Because realistically, that doesn't seem like it was a huge dramatic miss off of the median analyst estimate.
Right.
But interesting and always nice when you get some price movement, especially when you're making volatility trades.
This is big price movement,
covering both sides of the market.
Look at the size of those bars.
Oh, definitely. And it's even more intriguing when you look that we were just at 63.40. We're now almost a good dollar, good solid 80 cents from where we were just at 9:30 in the last hour.
Yeah.
So we'll check back in on it. Definitely some action in the oil market for sure.
And tomorrow, gas. The poor gas market. Let's go look at the gas market. So the gas market, I mean, it's getting warmer everywhere. Let's see, where are we? There we go. So 268. Well, it's hanging tough there, I guess. Okay. It's not breaking out. It's not breaking lows. That's
wide price ranges, though, on those bars, right?
Yeah.
I mean, it seems like there's a good 5 to 10 cent movement.
Oh, there is.
On a daily basis almost. Pretty remarkable. Because if you just jump back to, I mean, look at how small all these bars were for so long, right? Coming in.
Yes.
And then look at as we're in the winter, it's every bar is a good, you know, 8 to 10 pennies, it seems like, is a norm. Which is just a dramatic price of movement on a daily basis. You know, 13 pennies here, right? What do we got here? Yeah, a good 11 pennies here, let alone just at the beginning of the week, So we'll see.
And just so you understand, folks, 11 pennies is $1,100 in the contract.
Okay.
That's intense.
Watch out for that futures market.
Exactly. Well, especially the gas one.
Right.
The gas one is intense. There's no doubt about that. Let's go see what else is moving out here. Actually, you know, STI. When I was bringing this, I was doing a workshop yesterday. I was bringing this up. This is pretty cool. What was going on is that you had SunTrust, one of the banks. Yeah, see, this failed on price and volume yesterday. These banks, I'll bring up the rest of them, but you get SunTrust, had, like all the rest of the banks, nice run. It's trying to get into this high from the 29th. It failed yesterday.
Yeah, got over it.
What did we get? So you get 2.9 million versus 3. Oh, that's going to be close. Versus 3.6. Okay, no, that's okay. So, yeah, okay. So it's 600. Yeah, so that's 20%. Okay, that's 20% less volume, and it didn't make it. And what you have here is that high volume low from February 6th. That's game.
Okay.
Let me see, J.P. Morgan.
I was going to say, yeah. Oh, one more time, JPN.
Okay, so that's over it, but I just want to see how it got over it. See, that's over with volume. That has juice. J.P. Morgan has juice. It still has the high volume low, but
Yeah.
those 2 days up there, that has juice. So that would have to get tested again. Let's go look at Bank of America. Bank of America doesn't. See, there's going to be some divergence here.
Oh, definitely.
And this is where the, let's go, this is where this whole interest rate structure is going to be pretty wild. So right now, let's see, so you got, this is March. You get 86% chance of March, right? Of another rate hike, March 21st.
I think it's the chance is 100%.
Okay.
It's only 86 that's going to come in at a quarter point.
That's right. Okay.
There's 14% chance that they're going to hike it half a point.
Yeah, right.
Which I don't think is likely,
No,
but that's all to put things. So yeah, it's all built in that March there's going to be a hike for sure. Because the only conversation is right now 3 or 4 hikes for the year.
And then May is built into 82%. June, these went down then. These were higher yesterday.
Okay.
June and August was higher yesterday.
Because so to price it in, so they're estimating that there's going to be 1 hike probably in March.
Yep.
And then the second hike, see this is what jumps here, is going to come probably in June.
Yep.
And then potentially somewhere here, right, is going to come the third hike realistically.
Right.
Yeah.
And then
this is the probability of 4 hikes.
Right. And that was over 30% yesterday.
Okay, and that would make sense because, you know, it's at 26 to 18 and these will jump around a bit. Pretty interesting when you look at a 14% chance that they'd hike 50 basis points. I mean, that would blow the market away if they hiked 50 basis points in one meeting.
It would.
To see that. Yeah. And, you know, that's just a risk calculation that's in there.
Yeah.
It doesn't mean that that's an actual likelihood, but you know what? That's where real money is placed. So.
Oh, there's no doubt.
Yeah.
Let's go over to Amazon. So Amazon's buying Ring.
Yes, about $1 billion I saw.
Now, I haven't pulled it up. We'll have to pull it up in the next break. So Ring, those 2 guys on Shark Tank.
Okay, where are they?
And no one took them.
Oh, interesting.
Yeah, they were already pulling their hair out because they didn't take them because it went so big. But I can't wait. I want to pull that up and find out how much did they want. And you were only talking a couple of years ago.
Sure.
That's pretty intense.
That is.
So Amazon's buying Ring, and it totally makes sense because now what they're going to have, of course, is that you got the Echo, which is the audio.
Yes.
But
Alexa.
Alexa.
Yeah, right, which is the Echo.
Now they're going to have digital. Now they're going to have film.
Yeah.
Film outside the house, inside the house, all of the above.
Yeah, and I don't use it at all, but I've looked into it a little bit, and the way it's kind of working, right, is that you can kind of film your front door so that they can ring it, open the door, slide the package in, and walk out. And yeah, there's a level of trust there. But in theory, the person's on camera, so you're opening yourself up, and you know if they go anywhere past, opening the door and sliding it through your front door.
Right.
But it's bound to happen eventually.
Yeah, exactly.
Yeah.
Yeah. Hard to. I guess I can see that happening more in apartment buildings, but I guess houses they're gonna let it happen. I don't know.
Oh, definitely. Yeah.
Stay right there.
I would see it happening more in houses because apartment buildings, you're not going to be building into your apartment building this infrastructure because it might not be yours.
Yeah. Right.
That's a different deal to having to hook up your front door, all this stuff.
Stay right there, folks. Tommy and I are coming right back. We have the Dow up 154, Nasdaq up 48, S&P's up 13.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is up 122. You get the Nasdaq up 41. S&Ps are up 10. And folks, this is hard to believe that it's the last day in February, right?
March 1st tomorrow, man.
Wow. Intense.
That's right.
Intense.
So we've had the Den Open House all this month. Bunch of great signups. We encourage people to check it out. It's the last day that you can get in there. And when we say get in there, you get a full 30 days from the day you sign up. So you'll be in there most of the March. Get in there, check it out. You can gain access 30 days to the Tiger's Den, 30-day free trial, pay nothing. You can cancel at any time, and you get 30 days access. And we got a bunch of great Den members in there.
And go tell all your friends, too, folks.
And speaking of information, man, right, the Den, they're telling us what's going on with Shark Tank
and Ring.
Oh, yeah,
look at this.
So,
oh, my God.
So our man Pete in the Den saying Ring was rejected by Shark Tank. The founder asked for $700,000 at a $7 million valuation in 2013. So $700K for 10% 5 years ago. That would be worth about $100 million today.
Wow. Those guys aren't having a great day today.
Ah, they're made for TV. Good, whatever. Oh, for sure, that's real numbers. No, I laugh. I mean, that's real numbers, man, without a doubt.
That's a big number,
man. It is, without a doubt.
Wow.
Seriously.
That's intense.
It is.
It's, what's intense about it is that...
That's a decent 5-year return.
I want to go listen to that, because my understanding was that they never thought that it would work.
It's a tough concept, because even like I just joke there, like, you know, you're opening somebody's door and they're trusting it. Eventually, that is going to go bad. I mean, you know.
Oh, well, that's that. But that is, I don't believe that's the concept how they started. Like, I have it. I don't have Ring, but I have a, you know, I can always see who's coming in and out of my house.
Sure.
That's the concept. The concept, when they were doing it, wasn't like for Amazon.
It, yeah.
The concept was that who's at the door.
Sure.
You have the file on the door. Sure. You got the whole ball of wax walking in and out.
Yes.
You know, that's, you know.
Yeah, no.
Yeah, so.
We've come a long way in 5 years, right? I mean, in terms of Amazon.
Oh, yeah. Oh, listen, man.
What was Amazon at in 2013? My goodness. Just to put things in context of where that entire... that's you know what I mean. So the world has changed dramatically.
$253.
I knew they were going to be.
Oh my God! Think about that.
Yeah.
Wow.
Yeah. So I mean, you could have made 6 times your money just buying Amazon stock.
Right.
You know, I mean, there's been a lot that's happened.
No, that's important. Yeah, there's no doubt. right.
And you probably would have had a lot less risk buying Amazon stock than spending almost $1 million to buy Ring. As well. Yeah.
Oh yeah, there's no doubt about that because you know you buy that at 50% margin, you're only putting up $130.
Right.
And if you stayed in it, you get $1,500.
And realistically, your risk that wasn't going to be worth less than it was 5 years later.
Or out of business.
That's right. I mean, you know what I mean. It probably wasn't going to be worth 6 times the amount, you know, for expectation. But man, quite a turnaround. Let's jump back to oil real quick and take a look at where we're trading right now. So it is continuing to cascade down. So again, we started about 63.12 before the EIA numbers came out, down about almost 90 pennies from that level. And if we had taken the bearish noon trade, we would be almost at a full dollar, which would be $100 at this point. 63.25 down to 61.75. You can buy that back right now for $92. We're putting up about 46. Now, just to put things in context, though, even if we went out to, let's say, the 230, which would have been our 63 to 66 on the bullish side, we would have had about a 12 penny head start to the bullish side, and we would have had a little bit of room to make up on the bearish side. And this, this one was going to cost us, what was it, $60, I believe?
I think closer to 50.
50?
Yeah.
Yeah, you could be right. Either way, no matter what it was, my point's going to be that 71.
You're still making money.
Yeah.
And
you should be for
and you get to 2:30 in the afternoon, though.
Exactly.
This is this could be quite a day inside the oil market.
For sure, man. Right. It's amazing that we've been hanging above $60 for a long time in oil now.
No, it is.
Yeah. It's kind of become the new norm. $50 was the norm for a while.
Yeah.
$60 has become the norm for a while, but guess what? That might not be the case for
us. No, it's not stopping, man. This is not stopping.
It's not.
You know?
Yep.
And if we go over to the futures market for a second, a couple of tigers in the den, there's no doubt, man. This wheat is taking off like a rocket ship, man. Look at this, all the stocks, man. This is good for commodities. You get soybeans up 0.6%, corn's up 1.3%, sugar's up 3.8%, wheat is up 4.6%.
I had some good whole wheat pasta last night.
Did you?
Yeah.
And I wonder what this is all about, though. It'd be interesting. Is it about that it got too cold and then too warm for this winter wheat?
Seems like there's something for that bar, right?
Yeah,
I mean, there's something. And it could just be a huge buyer coming in saying the same thing. They found something. Whatever it is, it's something, right?
Because you get 196. It's almost a monster ABC up. So that's, 1 second. That's, okay, 479. 430. Yeah, this is saying, well, that would just finish up an ABC up. Let me do it this way. So if we go to W1, I do the continuous contract. Let's see where we're at here. Whoa, look at this break. This is a good break. I see. Okay, hey. 550's game now. Wow.
Yeah.
That's pretty. Now, that's quite a base that this has been building, too, folks. Okay, let me bring this back a bit. That's a nice base, man. This thing's been, look at that. So you just took out the base from June of 2016. That gets you game to like 524. You get that, though. 1 second. We might have just already broke everything. I like this one. There's a double break. What I mean by double break is that, yeah. So watch this. This is something I always really like, okay? You can make a speculation that we're going to 735, and this is what it is. You broke the downtrend in June of 2017, so, you know, almost a year ago.
Yes.
Okay?
Yeah.
Then you come back and tested it.
Yep.
Then you go again, because that you know, you have two different things. You broke the channel, you have the base, you got some juice up here.
My man Bud Rolfs, right? So you break out of the channel, you wanted to come back down, test the channel, and then shoot the other way.
And you talk about, you know it's amazing, folks, and we do appreciate you growling and prowling with us out here. Saw a lot of tigers at the Trading Expo, and you know, I'm sure you're out there, Bud, but a couple guys come up to me asking about you, and it was great.
That is great.
And it's amazing. Over the years, like, wow, it's like fast.
It is. And time flies. Bud's been doing his own deal for a little while now.
Oh, yeah.
It is amazing how time flies.
Totally.
Yeah.
Totally. So, market-wise, let's go over to the E-minis and take a look at the E-minis here. So, The high today is 27.62. The low is 27.38. That must have been last night. Yeah, it was. Okay, so we got a trading day out here again. This is going to be pretty cool.
It's kind of accelerating right now to the downside.
Yeah,
right?
let me bring this closer. Right. Yeah, but what that does, that always gives you some opportunity.
Yeah, these are 10-minute bars. I mean, the bar we're on right now. Whew.
Right. So 27.49, you could get that tested. It's going to be hard to break down from that 3 o'clock buy yesterday. The 3 o'clock buy,
the very end, yeah.
That had some really, that had 134,000 contracts. They threw everything at that.
Yep.
So that's where you basically support is actually coming in, you know. And I know that's deviant, folks, but guess what? We're at the beginning of window dressing.
Yes.
It's hard to believe. March 1st.
That's right, tomorrow.
The Ides of March are coming at us. Dow Industrials right now up 74, Nasdaq's up 30, S&Ps are up 5.5. Don't forget about the Tigers Den, folks. Tell all your friends last day. Come on over, groove it another good 30 days. Come right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
welcome back, folks. And if we take a look at, I just come back from New York, but you get Fashion Week just ended. But Amazon and Walmart, they're still going at it up there.
Right in the streets, they're talking about. Yeah, so they had competing events to show off their latest threads. So you have in a ground floor studio space in New York's Flatiron District, Walmart unveiled 4 apparel brands to the city's black-clad fashion press. So they have embroidered jeans, cork wedges, peasant tops. We're saying, fashion is a tough industry, man, in terms of having a reputation, a style, a following, and Walmart's trying to break in with some of their own brands, so they're trying to do it in a way that they're trying to compete and really, New York Fashion Week, break it out in those types of events.
A lot of press.
We've had more fashion than we've ever had before, said Apparel Senior Vice President Dina Baker. They're being careful not to go too far. Well, we'll see how that goes, right? But then you have, meanwhile, Amazon showcased everything from books to baby products at block-long Chelsea Market, where attendees were whisked in private elevators to a third-floor viewing room, complete with mimosas, mini beauty salon, and selfie stations, tagged with event social media theme, all on Amazon.
It's a different head game,
aggressive push into fashion was on full display, with rolling racks of clothes and tiered displays of shoes.
Well, and see that top one? Walmart event had no hashtag. No mimosas either.
There you go.
Just a hashtag. Never mind the mimosas, right? Don't you think? I mean,
yes.
It's the generation, right? It's the new people coming on. You know, I mean, I don't buy as many clothes as I bought when I was your age. Not even close.
Yeah.
You
sure?
My closet, maybe I do.
Yeah.
I don't
he doesn't shop, folks. Yeah.
I don't
believe that one. Sure.
I don't think I do.
Yeah. You got plenty of clothes, man.
I get too many clothes.
Exactly.
It's disgusting.
All right, let's check back in on oil one more time as we wrap up the hour.
Look at that.
Lows of the session practically, 62.22, and trading lower as we speak.
Stay right there, folks. You got swim lessons coming up. Then I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. S&P gave it up. S&P's flat.
S&P's negative,
NASDAQ is up, 12? Dow's up 18. Stay right there, folks. Thanks, pal.
Thanks, man.
Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.